After massive drops, both Bitcoin and the rest of the crypto market are seeking stabilization. However, it's autumn now, so is this the end of the bull market, or is it just a pause before the next upward impulse? Stay tuned. Hey, welcome. In another episode of the Crypto Market Analysis, where we meet every week to analyze Bitcoin, Ethereum, and a selected altcoin. We meet and take a look at the charts from three different perspectives: technical, on-chain, and fire charts. And as a result, the kind of condensed analytical knowledge we serve here, you simply won't find anywhere else online. Thank you for appreciating that. The number of our words is really very high, but I also know that a lot of people who watch these materials, especially Kanga trends, they don't even subscribe to this channel. So this is the right moment to hit that subscribe button, leave a like, ring the bell, or at least drop a comment, even if it's just for the contest. And remember, what is contained in this material absolutely does not constitute investment advice. For advice, consult a qualified advisor or just do what I do, conduct your own research. If you accept that, coffee in hand, let's get started. As usual, we begin our analysis with Bitcoin. So what happened here? In the previous video, I mentioned that I expected Bitcoin, if it were to drop, to fall to the level of $118,000. Unfortunately, that didn't happen, and the 118,000 level, due to information that emerged on Friday evening, was easily breached, and we even saw a drop down to $110,000, a level from which over the last 5 trading days we've bounced back as many as 4 times. So it's really very frequent very often, but at the same time it shows once again that 110 is a good support level. A regular support level. If you opened a long position from this point, even during the golden trade, which is a contest you can participate in on Kanga, then congratulations, because you're definitely in a very nice profit. But looking at the indicators themselves, let's try to estimate what's happening here and what we should actually expect in the coming days. First of all, we don't see the 9th downward candle on the TD indicator. Sequential. Here, the price action is unfolding in such a way that this indicator is currently in a reset. And we can see that Bitcoin is trying to stabilize its situation. We can also mention the moving averages here because unfortunately, once again, Bitcoin is falling back into their range. And we can see that the 100, which is the yellow line, and the 50, in recent days, both have been lost. There was an attempt here to reclaim both of them. And unfortunately for now, the price is bouncing off the 100 and moving lower. It's moving lower, but as I mentioned earlier, it's still defending that 110 level. And today it's trying to defend 112. And at this point, we can identify the basics support levels for Bitcoin, and note, fortunately, we have a cycle that looks exactly the way it does. Why? Because through the lens of this price action, which is very often a boring consolidation, we have a whole lot of support levels. And as we can see, there are certain reactions at these levels. So the first support level from the top, looking at it, is $112,000. This is this shaded line here, which I've just highlighted. And for now, the price is bouncing off it today. 110. As I mentioned a moment ago, a bit lower, we find a level around $108,000, which is around these lows here as well. And note that the 200-day moving average, our green line, is approaching this area. It hasn't been tested for a very long time, either from below or from above, so it's quite logical that Bitcoin could touch it in the near future. Will this happen? We don't know for sure, but there are some indications because this consolidation causes the moving average, even if the consolidation lasts longer, to reach this area quite quickly. And it is currently around $107,288. If it were to be lost, I think it would rather be a downward pull. A wick down to $105,000 and a rebound back up in order to trigger renewed growth. And there are really many arguments in favor of further growth, and there is one indicator that strongly points to this, which we will get to in the on-chain analysis. In any case, at the present moment, what I expect from Bitcoin is definitely an attempt to reclaim the moving averages, the ones up here, namely the 50 and 100. The 100, which is the upper one, is currently around 115,500. Besides that, let's also take a look at the RSI to see exactly what it looks like. And we can see that it is well below, maybe not extremely deep, but yesterday's session closed at 44, which, as we know, is below our boundary between bulls and bears, set at 50. Here, 50 remained. Here it was lost. Here it was confirmed as resistance. We see a dive, and I see potential here for Bitcoin to actually break through the moving averages to reach around $118,000, which in my opinion will serve as resistance for now. And at the very same time, Bitcoin on the Relative Strength Index, RSI, has the clear right to be positioned above 50. What could this mean? Well, basically, it means that later the price action should become a bit more concentrated between the moving averages that we observe here and the $18,000 to $20,000 range located right here. As a result, this will again create momentum to rise higher once more. As we can see, There are plenty of bounce points and support levels. For the present moment, I'm approaching Bitcoin with a certain degree of caution, as I am consistently seeing good buying opportunities, especially through the strategic method of dollar cost averaging, DCA. And I will definitely take advantage of them. However, I don't really feel like the bull market is actually about to end here. And suddenly, for us to be able to break through all these support levels quickly, or at least easily, or basically to break them to the downside, there is more potential here for Bitcoin to trigger an upward impulse, although, well, it's this struggle with the lower price ranges. Unfortunately, it may happen. Literally just a moment ago, in a rather unsubtle way, I conveyed the information that, in my opinion, the bull market is not actually ending right now, even though there is one factor that basically suggests it. I also talked about this at Cryptosphere last Saturday. If you were there and listened to me, I hope you found some pretty interesting things in my presentation. In that talk, I cited many indicators that show exactly where we might be at this moment and whether we can actually be experiencing a supercycle or not necessarily. And I based everything on hard data. One of the indicators I mentioned there was very controversial. It was the P-cycle top indicator, which I also discussed at Kanga Trends, and which you asked me to reference quite regularly. Well, I think now is the right moment because we're just entering the fall of 2025, when at least from a time perspective, we're expecting the peak of the bull market. But the timing is, so far, as I mentioned earlier, the only indicator that can tell us about this. And attention, the PISLQ top indicator. This is an indicator that has repeatedly, historically, pointed out the peak points for Bitcoin. In 2013, we had two such peaks, and of course, the margin of error here in terms of percentage error was very high, reaching even several dozen percent. But we also know that adoption was very low, so it's no surprise. At the same time, however, the error in timing was only 4 to 5 days, so very little. These peaks were, as we can see here, identified quite accurately. Later on, this was also a historical data point on which this indicator was later based. In 2017, basically the PISA and Q-top indicator, which, let me remind you, is made up of two moving averages, the 111-day, which is this red line, and the 350-day, or rather a double and its multiplication. That's this green line, and at the moment when the red one crosses the green one, from below we are experiencing the peak of the bull market. Most often at least, and it would be very simple if we relied solely on this indicator. We don't do that, but we still monitor this indicator as one of many, and we can see that in 2017 that signal was literally perfect. Later on, in 2021, I'll tell you right away before I get to it on the chart that the first April peak was also hit quite well, with a relatively small margin of error, just 2 days and 8%, so that's pretty good. The bull market peak may not have been hit, but it still looked really quite promising, especially in April. You're probably wondering now what the current situation looks like between these two moving averages, right? And now, I am carefully moving the chart a little bit further to clearly show you exactly what is truly happening at this precise moment in time. And just look, the significant gap between the 111-day moving average and the double multiplication of the 350-day moving average is absolutely enormous indeed. And looking solely through the lens of this indicator, we might think or suggest that we're actually dealing with a supercycle. Will that be the case? As I mentioned earlier, we're looking at the market picture. Holistically, we don't just take one indicator into account, but also look at other indicators. We'll get to those in a moment as well. As usual, in the next step, we move on to the Bitcoin Fire charts, meaning we'll check how the order books of the largest cryptocurrency exchanges in the world are behaving. And here we see our blue line, which represents the price of Bitcoin, and we also see our horizontal lines, which are the buy and sell volumes. And of course, the brighter they are, the higher they are. The buy orders are located below the blue line, while the sell orders are above it. And let's focus primarily on this. Let's start with what's happening at the top. In recent days, even before these declines, we saw that there were a lot of sell volumes appearing in the area from basically $125,000 and up to $130,000. And those order books, as we know, have been depleted due to the sharp declines we've experienced. We had the opportunity to observe this on the night from Friday to Saturday. These orders were definitely being withdrawn here, moved a bit lower, which meant that if a rebound were to occur, it would be dynamic. At least it might have even broken the ATH if at that moment there had been some very bullish positive news that would have changed the market outlook, but that didn't happen. We can see that over time, these zones between 125 and 30 are being built up again. And here, the selling volumes keep increasing all the time, but between 125 and the current price, we don't actually see that much selling. Of course, we can observe that there are some volumes here, a dozen or so. A dozen or so million in the individual areas I'm currently passing through, so somewhere around here, that's in the range of $114,000 to $116,000. Then, around $120,000. Here as well, we have a dozen or so $1 million in Bitcoin still waiting to be dumped onto the market. Despite that, these volumes are not large at all. Besides that, we mentioned that there are a lot of support zones below the current price, and they are illustrated here very nicely. Let's see how many of these purchase bands there are. There are buying zones here These are special areas worth considering, apart from those distributed around the current price and below, down to 110 or even 100. I see 8. Here we have regular buy orders spread out. Stronger volumes appear precisely around the 105 level. They mention the 105 level, and then only around the 100 mark. But as I said, these are areas where if there is a drop, I expect a rebound could happen at any possible point. So catching falling knives, whether it's worth trying here, this is not investment advice, but I personally, if something like that happens, will definitely do it. As for who is buying at this moment, it's worth taking a look. At the CVD and at the CVD, we see a certain picture that we want to see. So first of all, it's the whales who are buying, our brown line, who have been active for a good 3 days, as I can see here. And besides that, there has also been activity from retail wallets, meaning the smallest ones, those that hold between $100 and $1,000 in their balance. As we can see, that's our orange line, and it's also rising very nicely. Perhaps in the most recent 24-hour period, it has experienced a slight decline, but the overall, more extended term trend continues to be significantly upward. And I expect that this trend may continue. Ethereum is currently in a slightly better situation than Bitcoin. Ethereum is basically dealing with the area between two moving averages. But before we get to that, let's explain what happened. We saw, just like with Bitcoin, very sharp declines down to the level of $3,500 and even a bit lower. This value of 3.5, here we have a horizontal line marked as a potential support level, which we had already marked quite some time ago. However, we did not expect that the declines would reach such depths or even happen at all, because we pointed out that here we had head and shoulders, and this head and shoulders pattern was already invalidated last week with a target of 3,600, and that target had no right to be reached, at least purely from a technical analysis perspective. And I think the market feels the same way. This is reflected because the new rally, as I mentioned earlier, is stronger here than it is with Bitcoin. Bitcoin is currently below the key moving averages, whereas Ethereum is between them. Besides that, on the RSI it's higher, but still, unfortunately, below 50, so still below the boundary between bulls and bears. There really needs to be strong momentum here to break through 50 and be able to rise upwards and to re-enter that consolidation zone, which we basically saw here. So as for Ethereum, I am not changing my forecast. I still believe that Ethereum has a chance to attack the ATH, and what happened here was basically a dive. It was a kind of dive in order to draw in liquidity and trigger upward momentum. As we can see, it really is happening. Currently, we don't see any factors here indicating that through TD. Sequential, for example, suggesting that the trend could reverse. So far, no, but something interesting is appearing on the RSI that's worth noting, and that's a bullish divergence. A bullish divergence that is quite low, because we can see that here we touched the 30 level. Here, Ethereum is a bit higher, but the price moved in the opposite direction. This may mean that, in fact, the current interest from buyers, the buying pressure, is higher than it appears. That's the situation on the chart. So as for Ethereum, at the moment, I'm approaching it quite positively. And now, Ethereum on fire charts. Here, of course, just the fire charts themselves. We're not able to get much out of them, but the CVD shows us some interesting things. We can see that literally 24 hours ago, buying activity on Ethereum was triggered. And at that moment, it basically involved all interested wallets at once. Currently, for the past 24 hours, we've seen a kind of flattening and waiting period, but there's a chance here that this movement is changing. That is from the downward trend we observed for several days earlier now. Ethereum is probably starting to enter an upward trend. We'll definitely keep monitoring this chart all the time. Time for an altcoin, and today it's really something new on Kanga Trends because it's World Liberty Finance, or WLFI. And this is a coin you chose after today's analysis. And just a heads up, we can't say much about it here because it's a relatively new coin with a very short history. And that may indicate, among other things, that we can't draw any information here. For example, based on moving averages, we can't draw any concrete information from the RSI or from other indicators that often refer to what has previously happened with a given cryptocurrency. But it's still worth noting, however, that sequential indicated the 9th consecutive bearish candle on this chart on this cryptocurrency. And here, there is a very high chance that a rebound and breakout will actually occur to the upside. So from that perspective, it looks okay. However, when it comes to the fire charts themselves, let's pay attention to where the individual points are located. Support and resistance. The first support points are located right here, around 13 cents, if I'm not mistaken. Let me check. Yes, these are around 13 cents. And the first significant resistance levels are at least around 17.5 cents. And interestingly, it's worth looking at what's happening here, right? CVD, because this time we'll start with the orange line, which represents retail traders who, as we can see, are still in a downward trend. They're not interested in buying. I would even say they're interested in selling. But the forces here are actually shifting. And this shift in forces causes us to observe, for example, a red line that is rising, albeit rather irregularly, and we see a purple line that is doing exactly the same. These lines represent portfolios, and here we're actually presenting them together from $10,000 to $1 million. These are portfolios that hold that amount in their balance and are currently interested in purchasing WLFI. So we can see that while retail investors are selling off, the bigger, stronger players are buying, and perhaps they're reacting to that one single indicator we've just noticed on the chart, namely TD, sequential, which suggests that there might be a slight trend reversal happening here. And if you'd like me to analyze your altcoin, remember, it's a very simple thing to do. All you need to do is register on Kanadze, and you'll find the registration link in the description of this video. Browse through the cryptocurrencies we have and choose the one that interests you the most. Just remember 3 basic rules. First, it has to be a crypto from Kanga. Second, it can't be Kanga itself. Third, it can't be any meme coin. So you know what to do. The comments are open. Let me know which crypto you'd like to see analyzed next. Time for a quick market overview. Spot Bitcoin ETF in the United States. And here's an interesting fact. On Friday, when basically the whole market crashed, the ETFs didn't do the same. Why? Well, I expect that the information that hit the market simply appeared quite late. The ETFs that day were probably in a buying trend. They started selling quite late, so the total sell-offs attention amounted to the overall balance for that day minus 4.5 million in Bitcoin, so very little of that candle. Basically, in this spot I'm pointing to on the chart now, we can hardly see it. So here, the market absolutely did not collapse, at least not on the ETFs, and that's a good thing because the declines, whether in Bitcoin or in altcoins, which already took a heavy hit, could have been much deeper. Well, we did see such declines in the ETFs on Monday, but they weren't particularly large considering the volume bar and comparing it to previous ones. It's really nothing out of the ordinary. What's more, on Tuesday we already saw the first purchases as well. They're not large, but they do send a somewhat optimistic signal suggesting that safety is returning to the market, and it's likely that Bitcoin is currently stabilizing its price. So that, hopefully, it can finally make some decisive move. Of course, upwards. And the fact that this move could be upwards may be indicated, for example, by the latest indicator, which I will mention in a moment during the on-chain analysis. It's time for on-chain analysis, or perhaps not strictly on-chain anymore, but rather an analysis within the block of indicators that will help us determine whether we are currently at a pivotal and critical moment for Bitcoin or not, essentially deviation indicators. Critical ones, simply put, which I mention very often, and now I will probably be doing this even more frequently due to the period we are currently in, that is, the potential for us, at least for the duration of this mentioned period, to be close to Bitcoin's price peak. And the first of the indicators that I'm mentioning right now is the 200-day moving average, a kind of heat map essentially, based on the 200-day moving average, which shows how quickly it is rising. And notice in previous cycles, as we saw here in 2013, in 2017, and in 2021, on this heat map, every time we reached the peak value of Bitcoin, the colors became increasingly warmer. Now, however, it's cold. It's very cold, which may indicate that the peak is we potentially still have a long way to go. Here, warm colors are absolutely not appearing, and there's no potential for them to show up anytime soon, taking into account the consolidations that Bitcoin has been in during the current cycle. And the fact that essentially consolidations are also corrections, well, this could trigger a longer growth cycle for us. But as I often mention, there's still no certainty about that yet. It doesn't have to be a super cycle. It could simply be a cycle, an extended one, but many indicators. It tells us that, in fact, such a scenario is becoming increasingly realistic. Another indicator that could hypothetically send us a signal here, a slightly different signal, is the Bitcoin macro oscillator, or BMO. The BMO, as we can see in the current cycle, very regularly reaches a certain level around here, the value of 1, and it regularly bounces off it. Interestingly, just before the declines that hit us last Friday, the BMO also peaked at this plateau, which it cyclically reaches during the current bull run. This is an indicator whose critical points are found much higher. And considering how it is currently behaving, I would expect it to be one of the few. Attention to indicators, I'm emphasizing this very strongly, which can break out much higher, but there are also many other indicators that are reaching such flattenings, such resistance points, and are finding their peak point in the current bull market, or the point from which a correction begins. That's what I expect, that there will be plenty of such behaviors on many indicators, and those that break through to new highs will become fewer and fewer. We will definitely be watching this BMO indicator as well, specifically in the context of whether Bitcoin still has a chance to reach even higher values on it, and of course by checking where its peak might be. And now the last indicator, a typical on-chain analysis indicator, which is the amount of Bitcoin currently held on exchanges. And pay attention, this is something that should please our eyes because we can see radical, even dramatic declines occurring over the past few days, which means, and what has happened recently, these drops, this deep dive, whether it's Bitcoin or altcoins that have plunged deeply, some even by more than 80%, which is really a lot, this creates real buying opportunities and causes Bitcoin to flow out of exchanges. Bitcoin is being bought up and, as we can see, is in a very strong downward trend. currently, which could lead to a retest of the lows that were reached in June of this year. Is this a positive factor? Yes, it is. It clearly shows that there is demand. That demand is very strong, and that increases and attempts at new all-time highs are very, very possible. It's time for a contest, so let's start with the rules. Present your own analysis of one of the cryptocurrencies I mentioned in today's video. So it can be Bitcoin, Ethereum, or World Liberty Finance. Present your technical perspective, on-chain analysis, fire chart, sentiment, fundamentals, whatever you like, and remember, you don't have to agree with me. The author of the most interesting comment, which is posted by Friday at midnight, will win 20 kilograms from me. And the winner for the previous episode is Jacek and 2 million, who analyzed Bitcoin. Congratulations, Jacek. Please contact support to claim your prize. And that's all for today. If you enjoyed it, and I truly believe you did, since you're still here, if this is your first time here, make sure to subscribe and join me again next week. And please rate this episode on a scale from 1 to 808, where 1 means it was weak and bland, and you do not want to see more, while 808 means it was fantastic and you want more of it. And if you do want more, I'll see you in the next video. Bye.